Jones joining us live from Bell Direct in Sydney. Leanne, great to have your company today. In terms of the market, interesting just to see, as I mentioned there, that we are holding on to these gains and quite nice gains, I guess, given energy and miners are both in the red. What do you put it down to?
Absolutely, Ingrid. Very nice to see. I think if we have a look at some of the best performing stocks, we're seeing that healthcare sector really led higher by ResMed, which is continuing to have a very strong performance, up another 8% today following that strong earnings report that came through on Friday. But I also think the fact we've continued to see that Aussie dollar reaching 5.5-year lows over the weekend, that's certainly having a positive impact there. We are seeing those consumer stocks, so that discretionary sector as well as the staples sector performing strongly. And of course, one of the biggest sectors of the market obviously being the financial sector, being led higher by all of the major banks, so certainly seeing some strength across there. And of course Telstra and those telco stocks, so those high yielding stocks really continuing to perform very strongly. As you say though, continuing to see that materials sector as well as the energy sector coming under pressure, mostly as a result of that iron ore price falling off. And we also did see gold about 1% lower on Friday, but certainly very nice that we are continuing to see these gains, really following on from the strength of course that we saw on the market last week. We were up about 3.8%, so now it is looking like this is the fourth consecutive day of gains. We obviously followed on from those very positive leads we had coming from the US and of course Europe this morning. Markets really still continuing to digest the impact of that Eurozone bond buying program, and of course we are also seeing some strength across the region today as well. So I think a number of those factors really adding to that positive momentum, hoping that we'll certainly be able to continue for the rest of the day.
All right, want to take a look at Lynas because it's taken quite a big hit today, down close to 10% after a production report. What did you make of it?
It is quite interesting, Ingrid. I do think potentially it's being a bit overdone today. If we have a look at that production report, it actually looked okay, but certainly the outlook I think remains a bit challenging. It has actually been the 6th consecutive quarter of increases in production. That was up about 22%, and of course their sales revenue, which was up about 37%, and the big one where we did see a maiden positive cash flows of $1.2 million, and of course that's the first time in the history of Lynas that they have actually seen positive cash flows coming through. So it actually didn't look okay, but looking at the outlook, they are saying that those positive cash flows are unlikely to continue, obviously as a result of weakness in those rare earth prices and of course those restructuring costs. Also looking at their production, that's been affected by some remedial work that's been undertaken, and they are saying that it's unlikely that that's going to be mitigated to the full extent coming into the March quarter. And also finally looking at some of those board changes, we've seen a new chairman and also new non-executive director being appointed today, and sometimes that results in a bit of uncertainty and a bit of volatility in that share price as well, so potentially that's also adding to a bit of that share price weakness. But I think overall the outlook for the stock very much looks concerning given the weakness in those rare earth prices. I think their balance sheet still remains quite concerning despite seeing those positive cash flows coming through this quarter. Obviously that's not likely to continue, and of course the slow ramp up of their Malaysian refinery, still some very high costs there as well. So I think the outlook looks very challenging, and obviously that's been reiterated by that commentary from the company today.
All right, also just looking at Cabcharge, interesting to see that stock in the black today, up about 0.7%. Obviously this warning coming from Western Australia, caps there of 5%, but I guess this is pretty much priced into the stock.
I think that's exactly right, Ingrid. If we look back in October, we actually saw a similar commentary coming from the New South Wales government where they were looking to reduce that cap to 5% as well. The company said that would result in their service fee income potentially reducing by about $14 million. And of course, this was all after the Victorian government last February imposed those caps. So I think overall it was probably highly likely that we would actually see a number of these other states following suit. So I think the fact that we haven't seen a huge tumble in that share price is a result of the fact that this was probably largely expected. If we look across in Victoria, the reduction obviously of that cap has led to the negative impact in terms of that fee income, but we have actually seen on the flip side of it a higher turnover. So in the first 5 months of that cap actually being introduced, we actually did see a higher turnover, up about 31% or so in terms of using some of those facilities facilities. So despite actually seeing New South Wales and of course the Western Australian government now coming through with a reduction in these caps, I think overall we're expecting to see that higher turnover really coming through, and hopefully will actually result in a lower overall net impact for Cabcharge. So I certainly think that's why we're not seeing a huge tumble in that share price. I think looking at the outlook though, certainly a lot of these taxi payment fees are coming under a bit of pressure, and obviously they're encountering a lot of problems, or a lot of challenges I should say, in terms of those regulatory and technological challenges as well. So probably a little bit cautious in terms of that outlook, but certainly was expected seeing this reduction today, and obviously seeing that share price holding up quite strongly.
All right, Leanne, we'll leave it there, but thanks a lot as always.
Thanks, Ingrid.
Leanne